Hi, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 22nd of October. All right, bit of an early start to the today's coverage. Now, just having a look here, it's taken all week, right, for things to work themselves out now. I was talking with our trading team, focusing on the Treasury yields. The general basic relationship with the Treasury yields and the dollar has been inverted all week. And if you did not identify that, you'll probably be struggling and losing money all week. As the yields go up, the dollar's going down, right? That's the whole focus of where everything's been. But that relationship, right? Well, that inverted relationship only lasts as long until the market recognizes it. Then everyone gets on it and then it stops. And this is sort of seems to be where we're at the moment. But the other thing is when you've got a market that is working, say like working against each other, like the Treasury yields going up, which generally means interest rates are going up. And then you have equity markets going up as well. That's not a relationship that is, I feel comfortable with, because if interest rates are higher, generally equities are going down, right? So there's been a bit of a discombobulation there, and it's taken all week. And if I give you a look at the currency pairs, I mean, we've been waiting for this all week. We are starting to see a lot of these currencies like the dollar block, euro, sterling, Aussie and Kiwi, right, have been charging to the top side with that strange relationship with the yields and the dollar, right, driving the markets. But there is light at the end of the tunnel, and the market always comes back to some sort of rational, normal behavior. Now, the good thing is we've just seen the coming out of today's trading, existing home sales. Okay, it's not a top tier number. And this is the good thing about this is we've got a sort of secondary number here that, is a key part to where risk is in the financial markets in the US. Coming out, numbers are a little bit better than expected, and the market is reacting to that. We're getting a stronger dollar on the back of the economic data, right? So let me just show you the numbers here, just using FX Street. FX Street's done a good job here of getting their calendar organized. So just having a look at the existing home sales, the forecast was 6.09. Of course, the number came out at 6.29. So only a little bit of variance, but you know what? This is a new step for the dollar. This is new data, new strength, and it goes further to pushing the yields up and the dollar a little bit stronger. So just keep that in mind. So with the dollar at the moment, well, the market profile, we need to be keeping a close eye on the US numbers, right? Because you can see the relationship. They are now very actively in play. All right, so that's where we are. So with the coming back to the currencies, so the worm may have turned, right? These higher US Treasury yields and the weaker dollar was not going to last forever. So we've seen the euro top out here above 116.60 twice. Sterling massive rally up to above 138.30. Aussie up into the mid 75 and a half, and Kiwi above 72. These are huge clean outs to the top side. I sort of suspect if we get continuing US or just a little bit better US data, we're going to start seeing the impact of those Treasury yields on these currencies, and the dollar should rally aggressively, especially now that all the short, medium, and potentially longer term trades on these other pairs have been completely flushed out, right? The dollar index still cruising to the top side. Dollar Swiss, it's a bit unsteady. And you can see finally a bit of a clean out of that big dollar yen move that we've been seeing, and a correction here to the dollar CAD downside move since the last sort of week or two. Now, this is where we come into where the focus switches today. We've got Canadian retail sales figures coming out. Now, I'll cover the data in a second, but just have a close look here. If you're trading dollar CAD, right, we've got, say, resistance trend lines here, which have been in play, and they are at the moment. You can see this top one holding dollar CAD at the moment. That's where the liquidity is, but you've got to keep in mind oil, right? This is the key to it, right? And Friday, we're starting to see some good volatility here in oil, where it's moving up and down $1.52 on a day, 84 down to, what's that, 80 and 3/4. So that's like a $3 move. That's going to put upward pressure on dollar CAD. right? And oil has come a long way. That's got to correct as well. So if you're trading retail sales today, do not take your eye off oil, because you've got to keep a close eye on this relationship. If oil, if dollar CAD, if the retail sales figures are strong, and I'll come to the numbers in a second, that's going to, like, strong Canadian numbers puts downward pressure on dollar CAD. But at the same time, if oil is falling, sorry, I've got this chart inverted, then that's going to really make the move confusing, right? So what you want to be doing is, you don't wait to see what oil's doing. You get into the trade. Say, for instance, if the data is really weak, right, then that supports a stronger dollar CAD, right? You want to be keeping a close eye on oil. If oil continues to fall, that's going to be a double driver, and you're going to get a nice move, probably another 50, 70 points higher. Don't forget, the market is short dollar CAD, right? So really weak numbers is our best outcome, because we're going to get a much bigger squeeze. But along with that, we want oil, and on this y-axis, you can see oil is inverted. If it falls back below $80, well, then dollar CAD is going to be up around 124.60, and that's a nice, easy trade. What I'm trying to point out to you is just be aware of the nuances of dollar CAD. Okay, you've got to consider the economic numbers as well as oil, because if they're working against each other, you're going to get volatility and get flushed out of the trading opportunity, right? It's not a happy situation to be in. Now, looking at the numbers, okay, if I just scroll down here, right, there's a few other things coming out, but retail sales figures here, coming back to FX Street as well. If I can just scroll down. Now, there's a couple of numbers coming out. You got, see what the authorities have done, or authorities or stat community and the governments or the central banks have got the data. Now, what they try and do, especially in the US and North America or across North America, is take out the automobile component, right? When they do that, you get a bit, you can probably see what retail sales is really doing. So anyway, there's two numbers. To me, the retail sales number, the whole number itself, is the key to it. The numbers they're expecting, 2.8 and 2%, right? So the previous numbers here, 0.6 and minus 0.1. So over here, we're looking for X autos 2.8 and 2% for the month on month. Now, understand retail sales. Oops, I'll just scroll that back up. With the retail sales number itself, you've got to work out how much variance do you need. With this number, it's not like your normal, you're at 0.2. That's not going to do it. You really want, sort of 0.5 variance should see a more consistent move. Okay, either way, either up or down. Now, 0.5, 0.7, you're starting to get some real numbers on the board, and that makes it easier for all traders to recognize, as I said, stronger numbers or weaker numbers. Let me just write that in again, 2.8 and 2%. So if we get numbers that say 1.3% and closer to 2% for the X autos, well, that's going to put downward pressure on the CAD, and dollar CAD rallies. At the same time, if we get, let me just get rid of those ones. If you get numbers up towards, 2.5, 2.6, and then 3.5 for these numbers, you're going to get a really strong CAD move, and that pushes dollar CAD down, right? But you need decent variance here, right? I'm saying at least 0.5% variance, plus or minus, to get the ball rolling, right? At the moment, the other part to this is you need to consider where momentum is on dollar CAD, right? And you should also be looking at all the CAD crosses to see which one's the best pair to be trading. So when you're looking for direction and momentum here on dollar CAD, keep an eye on oil, right? Oil looks like it's been topping out here, right? We've had this last little push higher to $84. Now it's sort of drifting back. It's going to be very interesting to see how this goes. We've got a resistance trend line here. There will be stop loss orders above that, sitting here waiting to be triggered. I'd say they'll probably be done before the data comes out, because as liquidity gets pulled out, it may gyrate. But to me, you get weaker CAD numbers, we get oil falling. That's our perfect trade, and we're up here, right? It's a nice, easy break trade, clean out on that side of the market. If we get outrageously strong CAD numbers, well, then sure, it could go down. but I would and you would get into the trade straight away, and then you would be watching oil. If oil started to rally again, I would be comfortable to sit with it. But as I said, if oil didn't start to rally, it started to fall, and we had strong CAD numbers, you know what? I'd probably close the trade out and just sort of sit back and have another look, because it's a bit tricky. And that's the benefit of actually looking at all the CAD crosses, is you may find better technical setups than you would against the dollar, right? That's the key to this. Is it's not just trading the majors, it's actually trading all instruments. And the other part may be, you know, you could be trading oil or whatever you like. But anyway, that's pretty much it. The Canadian retail sales figures is a good number to finish the week on. There are a few other things coming out in Europe. Obviously, retail sales in the UK. And then you've got some PMI numbers across Eurozone and Germany. Definitely worth a look. You know, Euro looks like it's topped out, so weak numbers there should support a move lower as well. All right, guys, that's it from me. Have a good trade day. Cheerio.